The real estate market is at a crossroads in 2025. Some people are calling for a massive crash. Others are predicting a historic boom. But what's really going on beneath the headlines? In this video, we're diving deep into what the experts are saying, what the data shows, and most importantly, what it all means for you. To understand where things are going, we need to rewind a bit. Between 2020 and 2022, real estate saw one of its fastest growth periods in history. Low interest rates, pandemic-era stimulus, and a rush towards suburban and rural areas sent home prices soaring. But in 2023 and 2024, the brakes were slammed. The Federal Reserve raised interest rates aggressively to combat inflation, and mortgage rates jumped to over 7%. That shift sent shockwaves through the market. Buyers pulled back, sellers hesitated, inventory dried up. Prices didn't collapse nationwide, but the frenzy was over, replaced by uncertainty and hesitation. Now, in early 2025, the question is, what comes next? Let's start with interest rates, arguably the biggest factor influencing real estate today. After 2 years of rate hikes, the Fed has hinted at possible cuts later this year. Inflation is finally easing, and the central bank is under pressure to avoid tipping the economy into recession. If rates come down, even modestly, we could see a huge surge in homebuyer activity. That's because lower mortgage rates directly increase affordability. And with so many buyers waiting on the sidelines, it wouldn't take much to reignite the market. But it's not just about interest rates. Supply is another major factor. The U.S. is still facing a significant housing shortage. According to estimates from Freddie Mac, we're short more than 3.5 million homes to meet current demand. New construction has slowed due to high costs, labor shortages, and regulatory delays. That limited inventory means prices are unlikely to crash, even if demand fluctuates. And then there's the demographic shift. Millions of millennials are now in their 30s and early 40s, prime home-buying age. This generation is larger than the baby boomers, and many of them are finally ready to settle down and buy a home. That wave of demand is just beginning to hit the market in full force. On the flip side, affordability remains a real problem. Even with prices stabilizing, home values in many areas are still out of reach for average buyers. Cities like San Francisco, Seattle, and Miami are seeing price corrections, but they're far from cheap. Add student loan debt, stagnant wages, and rising property taxes, and you have a recipe for continued affordability pressure, especially for first-time buyers. So what are the experts saying? Zillow's forecast suggests a modest 3 to 5% increase in home prices nationwide by the end of 2025, assuming rates ease and buyer confidence returns. They point to strong job markets, especially in Sunbelt cities like Austin, Tampa, and Raleigh, as driving forces behind the recovery. Goldman Sachs, on the other hand, warns of regional turbulence. Their analysts believe some overheated markets will see further corrections, not a national crash, but a slow deflation in cities that saw extreme price spikes during the pandemic. Redfin's CEO has also weighed in, saying 2025 will be a year of transition. According to them, we're not going back to 2021 levels of chaos, but we're also not heading for a major collapse. Instead, expect a gradual, uneven recovery, with some areas booming and others struggling. Another factor to consider: investor activity. In recent years, institutional investors, hedge funds, private equity firms, even tech companies have been buying up residential real estate. In some neighborhoods, they own hundreds of homes. If these investors start selling off large portions of their portfolios, it could flood certain markets with inventory and drag down prices. But so far in 2025, that sell-off hasn't happened. Most investors are holding, and in some cases still buying, especially in growing suburbs and up-and-coming cities. So, what should you do? If you're a buyer, now is the time to get ready. Watch mortgage rates closely. Get pre-approved. Know your local market inside and out. If rates dip even slightly, competition will return fast. Don't wait for a perfect bottom that may never come. If you find a home you love and plan to stay long-term, it could still be a smart move. If you're an investor, the name of the game is cash flow. In uncertain times, don't count on appreciation. Look for properties that generate income from day one. Markets with strong job growth and population increases, like Nashville, Charlotte, or Dallas, continue to offer solid opportunities. And if you already own a home, 2025 could be the perfect time to refinance. As rates start to fall, locking in a lower payment could save you thousands over time. Just be sure to run the numbers and avoid refinancing if it extends your loan term too much. One last thing to keep in mind. Real estate is local. While national headlines can give you a general sense of direction, what really matters is your specific city, your specific neighborhood, and your own financial goals. In some places, the market is already heating up again. In others, prices may still fall slightly before leveling out. Do your research, talk to local agents, and make decisions based on your situation, not the noise. So, will real estate crash or boom in 2025? The most likely answer is neither. Instead, we're heading into a phase of slow, uneven growth. A recovery, yes, but not a return to the madness of 2021. If rates drop, demand will rise. If inventory remains tight, prices will stay firm. And if you play your cards right, there's still plenty of opportunity in this market, whether you're buying your first home or your fifth rental property. Thanks for watching. If you found this video helpful, hit that like button, subscribe for more financial insights, and let us know in the comments what's happening in your local real estate market. Are prices rising, falling, or holding steady? The housing market may be unpredictable, but with the right strategy, you can make it work in your favor.